most investors are really looking at the rear window here and not looking at what is changing really in the markets. Because all this sentiment, and sentiment is really negative, is really driven by last year's events in politics, in economics. And it's very clear markets are discounting mechanisms. They were very bad last year, but they discounted to a large extent a very difficult economic environment this year. So a recession is nothing new. And I think the big game changer here and the trigger, you know, for a market rally at the beginning of the year is really Chinese no-COVID policy dropping in December. And I think that's the big game changer. Everything else is old news.
So the fundamentals can continue to be weak, but the euphoria around the prospect of the Chinese consumer re-engaging is enough to push all markets higher? Or just Asian markets?
I think it's the trigger, and it's really big. The mentality worldwide will change back to global cooperation, back to business in the real economy and in the corporate sector, deal making, and in capital markets, clearly animal spirits. The point is inflation and interest rates are simply topping out. There will be no central bank easing or pivot of that sort in a dramatic way, but the worst is over and the market is looking ahead. So the liquidity is there, people are not invested, they have a negative view, and there are positive surprises, and the game changer of the year will be China.
Just picking up on the theme and how to play it, you've mentioned some of the Southeast Asian exposures, but also luxury here in Europe. Is there a sense that the Chinese has enough firepower to re-engage with luxury? I mean, LVMH stock has already started to rally to an extent. Some of the others, Kering, Ferragamo, have been a little bit left behind. So how do we think about the prospects for the sector?
Well, I think the prospects of the sectors are excellent. The sector is very small. So when we talk about the Chinese consumer coming back, you know, the basic play is global economy, European exports. You can play the German economy. That's very positive, of course. And European luxury has been doing well relatively last year already, but big dispersions of returns, some very expensive stocks, some less expensive stocks. But of course, it's all the marginal demand which is driving the prices in equity markets. And we see really that the marginal prices are going up because demand is coming back. And the prime beneficiaries for Chinese traveling will be the near abroad. That's Hong Kong, Southeast Asia, of course, and we'll have then the Chinese New Year. And by that date, probably, that COVID topic is that we went from a pandemic to an endemic situation in China. And that bodes very well for the unleashing of big consumer demand.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.